Good morning, everyone, and welcome to the European crossover webinar. And we are seeing indices move a little bit higher this morning after yesterday's sell-off. We did see actually, wow, I saw the NASDAQ actually dip into that multi-value area I had referenced as a stretch area. And we went actually below that, and we've recovered sharply. At this point, we can quickly take a look at that. So you can see here's that area that had, which the market at the time has not gotten to it yet. We're pretty close yesterday and the very late. That was a stretch. I shared that multi-value area at 12,749. You can see here that we tagged it, we closed there, and we kind of stood there, and we dipped below it, cleaned out some may have been stops or might have engaged some new shorts, and boy, we rebounding at this point now, come to the 12,883. But we dipped below that. That was my stretch area for yesterday, and also the pink line is the VWAP for the October lows. So you can see here it's got us way down here. Actually, I apologize. The November lows. We got below that. Now we can actually remove this part. There we go. Pretty solid recovery right now, actually. I'm seeing S&Ps, they dipped sub 3,900 and now they're up to 3,920. So you can see it got down to about not that far below 38.98. And look, they're coming up and they're powering up. We are into some resistance here, or just a level, I should say. Key level though, but and that was actually a double pop there and double single prints, and once we got below that, that really opened the floodgates earlier, and boy, we're rebounding quite a bit. Moving on to main screen. We also saw at the time euro dollar come down. We're trying to hold those lows at 1900. We talked about we might see a little bit of a respite, but things could be a little bit gloomy for the Eurozone looking out. So I think we may have to move lower, even if someone was bullish, may want this market to move lower so they could pick up at levels that they consider reasonable as far as risk goes. Looking out for data today, we do have German producer prices that were earlier, along with UK data that's already come out. And we do have some Mexican data for private spending and aggregate demand. And wow, that's going to be it. No, wait a minute. I do have Canadian retail sales, but nothing here for the States. So just Canadian retail sales. And we're going and moving to the news, which is fairly sparse despite the stuff we saw, or the action, I should say. Dollar stronger amid higher U.S. yields on Fed's lower for longer mantra. The safe haven U.S. dollar held firmer on Friday, supported by higher treasury yields and fading stock markets as investors digested the Federal Reserve's pushback against expectation of an early rate hike. The dollar index was slightly higher following a 0.5% jump from Thursday that was most in 2 weeks. The benchmark 10-year yield climbed to more than a one-year peak at 1.754% overnight. before easing to 1.70. The yen dipped after the Bank of Japan widened its target band for the benchmark yield in a decision that was in line with market expectations. The FOMC pledges week to press with aggressive monetary stimulus, say a near-term spike in inflation would prove temporary amid their projections for the strongest U.S. economic growth in nearly 40 years. After some uh, navel gazing, bond investors conclude that the Fed is not posing any challenges or discomfort for the longer dated U.S. Treasury yields to keep pushing higher. The dollar regains its mojo. The greenback was at 108.89 a yen. Bond the BOJ's decision to widen the band for the 10-year Japanese government bond yield to 25 basis points around zero from 20 basis points earlier. The yen briefly weakened past $109 before retracting all of the move. There's no reason for the dollar yen to react to the latest result of the BOJ assessment because it's almost in line with what the media reported in advance. At Masafumi Yamamoto, for dollar yen, U.S. Treasury yields is a much more important driver than the JB yield change. The euro was slightly weaker at 19.15. The British pound sank to 39.13 after widening a day earlier, or weakening 0.3 a day earlier. In the cryptocurrency, Bitcoin stood around 57,800. It seesawed briefly, topping 60,000 again overnight. Is it a bubble? Yes, but it can easily go to 100,000 before it comes crashing down, is one analyst's take. With that, we're going to move into the analysis. And there we go. And we're seeing the euro a little bit higher here. And let's take a look at the analysis for the euro. So the euro posted a dark cloud cover on Thursday. You can see that. Support for Friday will be 1871 with resistance at 1960. And you can see this dark cloud cover here. My thoughts is we'll probably have to go and move lower here. But even if someone is bullish, they'd want this market to dip a little bit lower before they feel comfortable taking in longs. Or once again, even with U.S. yields here, they're concerned, especially with the dark cloud cover, you move back. Obviously, end of week, tricky for people to just put on new positions. So we may just languish in here. But anyway, nonetheless, 1871, 1960. On to cable. Cable posted a doji on Thursday. Resistance will remain 39.93 with support at 38.53. So still quiet, very quiet actually. On to the Aussie. Aussie's upper wick stretched above the 78 area. You can see that clearly. But the pair closed near 77.50. Support on Friday will be 77.04 with resistance at 77.91. And across the board, everything's relatively quiet. Onto the Kiwi. The Kiwi closed with a resounding thud. Support for the Friday will be 71.15 with resistance at 72.14. Also traded rather quiet. On to the dollar CAD. Dollar CAD responded well from the sub 124 area, closing above the prior three sessions. Resistance for Friday will be 25.20 with support at 24.40. Same thing, very, very quiet. This wasn't too bad here. Our support was, remember, 23.62. So not wasn't bad at all. It was off by what, 2.5 pips. So support for today is going to be 24.40. And resistance 25.20. Dollar peso. So the dollar peso remained in a restrictive range despite the large move in risk and rates. Support on Friday will remain 2023 with resistance at 2062. And to the dollar yen. Dollar yen, despite the ramp in U.S. yields, could not challenge the weekly level of 957. The BOJ may see some impact. Resistance will be 930, followed by 957. Support remains 835. So 835. Actually, I should put this down to put this down here. And 930. If it couldn't get up there when yields were really blown out, it's not going up there. At least certainly wouldn't seem that way. On to the dollar index. The dollar index posted a bullish cloud cover. The close was disappointing in light of the run-up in U.S. yields and the subsequent risk-off move in equities. The move appears to be more of a default move resulting from currencies pulling back versus the actual dollar buying. Resistance for Friday will be 92.26 with support at 91.53. Still bearish. And let's go and move into the cross rates. We finally saw this thing pull back. Boy, what a pullback we got too. In Kiwi yen. And we had the 78.31, but you can see here we really came off and we're trading really quiet after that now. Support right now is going to be right there for today. Doesn't mean we can't move lower, but for today, 77.74. And resistance is going to be this high right there at close, 78.40. Onto the euro pound. We're still hugging the floor down here. So we'll go with 85.31. Although we had the 85.16, they came down to 31. They held it again, so we'll update to the 85.31. And on the upside, 85.82 will still remain the same. On to the euro odd. We actually dipped below this 52.98. We had 52.71. The low was 52.67. So it's held. I think that is going to go on and continue to go on and hold this point. You even have a little bit of a hammer. So we'll move this back to 52.98. And resistance is going to be right there, 54.25. Onto the Euro Kiwi. Still maintained a hold. And our support yesterday was 64.75. We got to 64.79. That wasn't bad off by 4 pips. Support is going to be this bar right there. Although I think we can still, I think the market can move beyond that. Well, actually, right here, this one will be the support. 65.21. And resistance is going to be right there. Oh, that's actually where it went to. Okay. Oh, actually just a hair underneath it. 66.48. Onto the RCN. We pushed up to these highs, and now we've kind of come back in a bit. Resistance is going to be right there. This wick right there, that one, which is 84.99. And support, right there, this wick right there, which is going to be 83.87. Onto the guppy. We never quite made it to that 52.78. We came pretty close though, got to 52.53. Resistance now, I'll go with this wick right here, which is 52.21. And support, we'll go, I don't think it's going to get there today. We'll go with this one for today, but I think we will move down to the 50.50. But 50.77. And lastly, starting odd. We did go on and dip down in here to 78.25. That was our support. And looks like it took it out just by about a couple of pips, or 10 pips. So came back. Support now is going to be right there. 78.63. And the upside of 80.10. And there we go. There's the bias chart complete. And we'll just take a quick look at where gold is at. Still pressing a little bit higher. Not way out of bounds, but we did make it up to 17.55 yesterday. We're rather quiet. We're at 17.41. Copper doing a whole bunch of nothing. And take a look at the 10-year. We've continued to push hard. Look at this. Just above this little resistance area here. This would be the key resistance right now, 31.23. That's an old one, too. Be interesting to see if they can push above that. We are at 31.20. We've gotten up as high as 31.21. And that'll be it. It's relatively quiet. We are seeing a little bit of a rebound here. In indices, we'll take a quick look at that. You can see here with the NASDAQ, we're pressing up against that 12,883. We got above it and we dipped just a hair below, and they're trying to press up again. Look at the S&Ps, 39.20. 39.25 is key for them. And the S&Ps, I don't pay too much attention to the Dow, although that was causing the market to move about. But we did see that dip, and then we've kind of holding here in this area. And the Russell saw a pretty good little pullback yesterday. And once again, back to this boost. There they are on the 2-hour chart. And they actually came down here we had 3,900, but actually went down to 38.98, and we're trying to rotate a little bit higher from there. And that'll be it. Adram says, any thoughts on gold? No, not any thoughts on gold. We can, once again, just jump back there. We got above, bear with me. If you take a look on a daily, we did that run up here to 1750. They've done some good work here. I mean, getting above. Remember that 1733 was so key. So we've dipped back below, and we even got back. We even dipped. We got down to 1725 before they rallied and back up. But a mixed day here with gold here. And I remember referencing this before, and some other people have also referenced this now, is that now with Bitcoin, a lot of people are willing to put their money in Bitcoin, and you can see the response you get from Bitcoin versus gold. You see what I'm saying? So, a lot of time, whenever we get into times of tumult, people would move into gold. Not so much anymore. They have the opportunity to go into Bitcoin, and I think it's taken a bit of a shine off of the gold market, per se. But that'll be it, and I'll get this posted. We'll see you in the chat room, and thanks for joining us here on the European Crossover webinar.